Live streaming is on.
All right, good afternoon, everybody. This is Gavin McGuire, event trader, and I am joined by options trader Brandon Mars. So, Brandon, how are you doing today?
I'm doing pretty well, Gavin. How about yourself?
I can't complain. Just I know we were laughing a little bit about some of the whiplash that's going on right there with the markets, and keeping an eye out on that S&P that got down close to that 45.50 level, and we had the Nasdaq that was prancing around 16K. So we're just kind of watching to see if the buyers step in once again and drive us higher. So some names that will definitely be keeping a close eye on the market outlook as it kind of unfolds, and obviously people trying to figure out what they're looking to do out there, Brandon. So I figured we'd start off the conversation by just talking a little bit about the broader markets and get what your thoughts are out there as we come out of the Thanksgiving week and get ready for heading into the final month of trade here.
Yeah, so I'm still feeling pretty bullish. I mean, obviously in the last, hour or so, this pretty steep drop, not feeling it right then. To me, that kind of has felt like some algorithms kind of searching out maybe some stop runs and just taking us down a notch. But we continue to remain strong. We got some good seasonality, got some reports out on Black Friday, the consumer, or Black Friday and Cyber Monday. The consumer appears to remain strong. So, as we head into the final month here after a pretty good run this year, historically speaking, we would tend to see some strong returns as we start getting ready for the Santa Claus rally here in a couple of weeks. So I remain pretty bullish and kind of really just focused on the call side for me. So yeah, keeping an eye on this. I mean, again, it was a couple of pretty nasty little drops that we just saw, but looks like we're trying to find a bottom here. We'll see if we can climb back to the highs of the day, but looks like at least some buyers are stepping in as we kick off this call.
Yeah, it's kind of the general thought here, right? We've been talking a lot about it for the past few weeks. Just a lot of under positioned portfolio managers that really need to do a lot of chasing in the last month here, setting up those FOMO trades. So in general, it sounds like you're of the same belief, Brandon, that you're expecting dips to get bought. So, do you just kind of avoid puts for the most part altogether in this, or are you willing to take a little bit of downside protection in some names via the put?
Actually, today was the first time in quite some time I didn't even put a single put on my watch list. So again, I've talked about this before. I have an individual put watch list and a call watch list, and I didn't put a single name there. Again, I just tend to do a little bit better when I focus on one side of the table. So just kind of feeling bullish, and this is usually a pretty strong week for the stock market. I just kind of decided to not distract myself because I like many traders, I find myself flipping over to that watch list and seeing what's going on there, and tends to normally be a little bit of a distraction for me. So today I just left it empty and gonna focus on calls and just try to get the timing down with some of these potential dips. And even on some of these dips, I'd only want to jump in if I saw some activity that I liked. Similar to kind of what we just saw, where you kind of saw some heavy volume kicking in, and you've got some tails going on, and kind of the 5-minute charts on the different futures. So if I didn't see those, then I'd probably keep waiting. But once you start to see it build, just gonna probably gravitate towards the call side versus the put side for the foreseeable future.
Yeah, and just to kind of recap the action that we were seeing about 30 minutes ago, that was in reaction to that bond auction. We've seen a few shakeouts of the like there. So I guess what it leads me to ask you, Brandon, here is obviously, we kind of came down to some staunch support levels. We are seeing a bounce off that at the moment. Hasn't been a clear winner just yet. We haven't gotten above that downward trend line from around the 11:20 hour. So still some work for the bulls to do. But I suppose, what are a few things that might knock you out of this current comfort zone, would you say? Is there anything in particular you're looking at in terms of maybe specific stocks or just patterns in the overall indices? What is it that you look for that would maybe raise a red flag to your current thinking?
Yeah, so it usually starts overall with the indices. So I mean, good example, just as I'm talking right now, looks like the NQs are right at that 16,000 level. So, I guess the question is on that dip, the little dip below it that we just got, was that maybe a little bit of a bear trap, or are we going to kind of continue on the downtrend? So, if it can't get above, and if we don't start to see some buyers stepping in above that level and in pushing us a little bit further up, that would definitely be a little bit of a flag for me. And then in combination, I've got my usual stocks that I watch on a regular basis, mainly in the big tech front. So, I usually always have, I don't know, 3 or 4 or 5 of those going at a time. So, if I start to see some of those breaking down even further in conjunction with the indexes, that's usually what would get me out of my comfort zone.
Okay. Do you have any levels lined up that I know a lot of people are hoping for a correction, right? And the problem is when everybody's hoping for a correction, they seldom come, right? Is there any areas that you're kind of, I would really love to see the S&P get down to here or the NASDAQ get down to here? Or does that really matter to you as much as how we get down there?
No, I mean, it's definitely important. I mean, again, if we don't hold this level, and then kind of looking at the daily chart on the NQs, when I start to see things like, actually, it's kind of happening right now, things like the 5-day moving average potentially crossing below the 10-day, which we're kind of shaping up for. When I start to see things like that, I start to get a little hesitant. Right now in the NQs, we're looking at, I think it's off by a couple pennies on one of the days, but we've got kind of like 5 straight inside days working on the daily chart of the NQs. If it were to break down below that mother bar or break out above it, those are things that very much intrigue me. So I would put some caution, and it looks like that's like the 15,900 level. That would probably throw some caution to me, and that would maybe make me think that the 20-day might come into play if we broke that level.
All right, so we'll keep an eye out on some of those areas there. So let's move on then, Brandon, and let's start talking about some of your recent trades. Um, One that you currently have on at the moment is NVIDIA, a name that you trade frequently. This has been battling that 480 level a lot over the last few days, ever since it reported earnings. You're talking about the 20-day moving average there for the NQs. NVIDIA sitting just above its 20-day moving average. So, what is it that you see in NVIDIA? What is it you're kind of looking for in the price action?
Yeah, I mean, again, NVIDIA is one of those that's just kind of on my watch list every day. And, despite the pretty solid earnings report, saw a nice little sell-off. So just kind of always watching that one of saying, okay, guys, when are you going to let it go higher again? So I was watching this morning, and just kind of had a nice base that it was building intraday on around the 476 to 478 level. And it looked like we were going to get a little bit of a move higher in the indexes. And I kind of said to myself, well, if the indexes are going to move higher, NVIDIA and the semis are probably going to need to contribute there. There were a couple of, kind of those longer wicks on some high volume, again, showing some buyers stepping in. So once we had that base and I felt like the market was going to move higher, thought NVIDIA would go with it, and actually got a pretty nice quick little breakout over, call it 25, 30 minutes or so. Option actually was up quite nicely pretty quickly, and then just kind of got caught here in this nasty pullback that we saw. So still holding on to that. Looks like it's trying to make a little bit of a bounce again off that 476 level. Actually, intraday, maybe not exactly textbook, but kind of forming a little bit of a double bottom on the intraday. So, if it dips back below that 476 level, that's probably something I would look at cautiously for that stock. And kind of to your question before of the overall market, seeing things like that start to raise a little bit of a red flag of, maybe I should be a little bit more cautious.
All right, so that's some good alerts to throw on people's radars. Now, no alerts needed for Boeing. You're in and out of this pretty quickly for some real nice tidy profits. I know you kind of lamented maybe getting out too early, but uh, like they say, no one's ever gone broke taking profits, right? So, what was it about Boeing? I know that SPR at the time was halted, so I don't even know if that was on your radar when you were making the call, if you had thought about that, but kind of curious as to your thoughts on Boeing here, which really just looks like one of the prettiest charts out there with this break above 200 now.
Yeah, I actually, SPR is not a stock I've ever traded, so I actually was not aware of that for full disclosure. So actually on Boeing, I actually had this on my watch list heading into today. On the daily chart, it had just been kind of hanging out around that key 220 level, and threw it on my radar as a possible breakout candidate. And then in the pre-market, I saw that it was up, a couple points, and I believe they got an upgrade this morning. I don't know if it was one or two, but I saw at least one upgrade out there. So a reason for a little bit of strength. And then, you got your typical gap up in the morning off of news, and of course the immediate sell-off that they sometimes like to do. And just kind of saw it again dip back down below that 220 level, and said to myself, this might be a little bit of a trap, a little bit of a head fake below a key level. So just jumped on it right then. And yeah, like you said, in and out a little too quickly, unfortunately. It looked like it was stalling out a little bit around the 223 level, which I had lined up as a potential resistance. And we were seeing some whippiness in the market, and it was quickly up 50%. So took the profits, and unfortunately should have let it go for about another hour or so. So I do still like this chart. I mean, maybe take a little bit of a breather after today. It is getting a little bit oversold on the RSI. Overbought on the RSI. I maybe take overbought with a little grain of salt in this market environment, because that could continue to run for a little while. But as long as this holds up above the 220, maybe a little bit of consolidation, like you said, this chart just continues to look pretty strong.
All right. And you put out a pretty nice list of on your watch list. Real quick, before we get into anything, I did get an alert on this brand, and I might as well get some real-time thoughts on it from you. Tesla, which is looking pretty interesting. Got an alert as it tests this 245 area, possible breakout. It's back above its 50-day moving average. I know some concerns, I guess, with some recent Musk tweets and just EVs in general, but it's been putting in a nice sideways trading range now and edging it up through the 50-day moving average. You got any thoughts on Tesla?
Yeah, so I actually didn't have Tesla on my watch list today because of that sideways consolidation that you had mentioned. But yeah, I mean, that's been sideways since November 14th, so mid-November.
Straddling that 50-day moving average, right?
Yeah, so now if you look at it on the daily chart, it's got the 100-day at 246. I would imagine would add probably a little bit of resistance, but geez, you got to imagine in this market environment that at least the 250 level is probably in its sights. So yeah, no, I mean that's looking pretty solid. I mean, that's got some pretty good volume on it so far today. Nice clean candle, no wick at the top. I mean, we got plenty of trading to go, but yeah, I mean, this one breaking out of that sideways consolidation, this looks like a breakout candidate for sure.
Yeah, no, so I wanted to get your thoughts on it. And real quick, I'm just keeping an eye out on this coin. I am seeing some alerts that our founder sold 9 million shares. The stock's been just off to the races, up another 6% today. So keep an eye out on coin. I have not been able to verify that. Might as well throw this one at you too, Brandon. I know you don't. I don't believe you trade this too frequently, but boy, that's some parabolic chart that we got there. Naturally, Bitcoin over 38,000. If you were approaching coin from a put call perspective, do you have any thoughts on it on that front? I'm not looking for you to make a call and put you on the spot. I'm just kind of curious as to your thoughts on this chart here.
Yeah, the parabolic charts, they always scare me because I don't know, they're parabolic and you don't know.
Definitely gravity defying, right?
It is. And, looking at Bitcoin, as it's made its way back over 38, actually, it's sitting right at 38 as I say that. If you look at it on a daily chart, kind of got a little bit of an ascending triangle going. I mean, got to imagine that 40,000 is probably in its sights, maybe sooner rather than later, which would presumably continue to lift coin. I don't know if that's one that I want to necessarily chase on this chart because it does look like it's maybe getting closer and closer to a potential like blow off top. We'll see, but I guess it's not a name I want to bet against either.
Yeah, no, definitely tough to bet against it in this environment, especially when you're just looking at that run in Bitcoin. As I said, gotten to 38,000. I'll see if I can confirm that Form 4. I'm not seeing it anywhere. It's not on our site, but one of the news agencies I follow is reporting it. So we'll keep an eye out on that play. Let's get into some of the names that you did have on your watch list here, Brandon. Meta Platforms, it's a constant one for you. You're always watching it. Obviously, getting a little tired following that run up from late October when it was down at 280 up to this 340 area. It's just kind of been chopping around in a sideways direction here above its 20-day moving average. What is it that you're looking for in Meta that would get you involved?
And just real quick back to coin, because I was able to pull this up while you were asking about our Meta. Just looking at the put call ratio here, the call sizzle index, which they show on TD, or I guess Schwab these days.
Sizzle index, I like it.
It's the call sizzle index right now, 1.848 today versus a put sizzle index of 2.12. So calls still outweighing puts by, I don't know, about 60,000 so far today. But, there's definitely some elevated put activity out there. Again, not seeing run out and buy puts on it, but just
where are they buying them? In that 105 area, somewhere down around there?
The coin puts, the big contracts of the day are the 125, the 120, the 115 looks like. And then let me check the 105. A little bit on the 105.
A little too far out of the money on that. I would assume.
Yeah, it looks that way. I mean, there's definitely some people that have bought those contracts today, presumably wondering if that parabolic chart will break, but that'd be a pretty big move. But people are jumping in at them at 9-10 cents a piece here as I look at the bid ask.
Yeah. Okay. So back to Meta then.
Yeah, so Meta, again, just had kind of been approaching that 340 area, had been hanging out there for a few days. Like you said, maybe getting a little bit tired. You kind of had that 5-day starting to level off, kind of even curl down a little bit. Actually looks like even on the MACD, you're looking at a possible MACD bearish cross and the histogram moving over to 0. But I did want to watch it because, again, if you're talking about testing a key level for 3-4 straight days, I think that bears watching. And was watching it yesterday real time, and it almost looked like it was ready to go over 340. It was building an intraday ascending triangle, saw some volume coming in, and then all of a sudden just the rug got pulled. I couldn't find anything on it at first, but it sounds like there's some further court documents that became unsealed. Just, I think some of the ongoing stuff with the FTC and I don't know, all the different legal stuff that you hear about from the different social media firms tends to end up being a lot of noise because we've been hearing about them for what, 5-10 years now or whatever it is. But definitely brought the stock down a notch and didn't do a ton of damage to the charts, but I'd say maybe put that 330 area into play if we started to see some selling. But again, strong chart could actually become a little bit of a pullback long candidate here if it can kind of stick around where it is and the market remains strong.
Is there any level in particular? I know you said 330. You got the 20-day moving average just down below that at 328. A breakdown of that, is that when you're looking for a pullback long candidate, would you prefer to see the flush down below those levels or for it just to come down and hold that level?
Yeah, I mean, if you got Meta to come down to maybe 325, again, another nice even or round number for us, a little bit below that 20-day to maybe trap some bears and make people think that it was coming back down to earth. That would probably be a pretty intriguing level. Yeah, again, though, if the market remains strong, who knows if Meta will ever see 325 again, right?
Right. Yeah. At this point. All right. Now, a few retailers obviously had that strong consumer confidence number. You were talking earlier about the solid Black Friday and Cyber Monday deals. This is one of the things that I was talking a lot about over the past few weeks, where a lot of these retailers were out warning about the holiday season. Everybody was concerned about it, yet a lot of the retail sales numbers and other numbers that we were seeing suggested that spending was still going on. Definitely seems like the consumer has one last hurrah. One of the interesting areas that we're seeing a lot of love for is the buy now, pay later, which, of course, when you're looking at credit card companies with about 24-25% interest rate right now, that buy now, pay later certainly looks a lot more attractive. The problem is, of course, how much is this being used and how much of the buy now and is being implemented into pay later, right? So, that's going to be one of the more interesting aspects of 2024. But for now, definitely painting a good scene about a good consumer. A buy that I had earlier today, Brandon, was Best Buy. That's looking like a beautiful chart to me here, edging up above 50. But you have three that you've been watching here that you threw on your radar, and we'll start off with Target TGT.
Yeah, so kind of the general theme on all of them was these were three winners of the earnings season. Target saw that really, really nice gap up. Been kind of building a somewhat of an ascending triangle. It's a little funky, but it keeps kind of just grinding higher from that mother bar, from the big gap up from earnings. So this is one that I have enjoyed trading at times. Again, some of the staple stocks aren't always all that great of traders. I've had some fun trading this one, and again, it's a big company that just doesn't trade a ton of options. So figured there was probably still some shorts that were trapped in there from a pretty solid downtrend, and just thought this one might have some room to run. So threw this one on the radar, but haven't done anything with it.
It's been holding those post earnings gains pretty nicely, right? So just edging up higher. What do you figure for a target, that 200-day?
That would be the ideal target for me. Yep. Maybe a little bit of resistance in probably the 135 range first. But yeah, overall, I think that 200-day as it's kind of sloping down, starting to curve. You would think through price and time that would be a pretty reasonable target going forward.
Okay, Home Depot took some HD, of course. Another name, another one of those charts just building nicely above that 200-day moving average and through the 50, broke through itself following earnings. And again, another name that's been able to hold on to its gains post earnings.
Yeah. So, again, just another earnings winner, grinding higher. It took a little bit of a ding after Lowe's reported. So I was a little bit cautious of that. But the thing I liked with Home Depot too is, I think it's got a double whammy on the potential tailwind side of rates dropping. In theory, rates drop, people buy homes, they go to Home Depot and decorate them or do home projects, whatever it might be. So just kind of thought that had an extra tailwind going for it, and just like the chart. And I mean, again, this is another one that got beat up quite a bit this year, so thought it might have some more room to run. I suppose as we get closer to the year, maybe there's some people that are a little underwater on it, so maybe a little cautious of some tax loss selling. But again, just like the chart on this one and like the interest rate factor.
All right. Lululemon, always viewed as one of the strongest retail names out there. This thing has been in a pretty solid upward trend, really going back to the beginning of October. Had that big pop in the middle of October, which I believe is around earnings, but it's not a usual reporting period for Lulu, so I'll have to double check that. But another solid chart up and to the right, a little different from some of the other ones that you're just talking about, that there had been some weakness, of course, in Target and HD. So how do you see Lulu when you compare that to the other two names that you discussed?
Yeah, and LULU reports next week on the 7th. That's what Schwab is showing. So I might want to just confirm that, but they're usually pretty accurate with their reporting dates. Yeah, like you said, just another strong chart. And on the daily chart, looking at November 16th, had a big down day after a shooting star candle. So came back down, saw some profit taking, and then ended up having about 3 straight inside days as it grinded higher. Kind of made a mini ascending triangle on the charts as it broke above that mother bar, and reports came in strong. Thought it might be a pretty good candidate to break that little triangle. After today, though, not necessarily anything I want to go and bet against, but that has, it looks like a tweezer top candlestick pattern. And basically what that is, yesterday, if you look at the close, the price of the close is essentially the same price as the open today. That's one of my favorite patterns to trade, actually, both on the up and downside. What's that showing is that level might potentially be a resistance level that we're not going to get through right now. So, and it's actually
You said you like trading it from both sides, so I suppose once it confirms that it gets through that level, you like it on the flip side, on the long side.
Yes,
Okay.
I would. So again, I don't think that this is about to fall off a cliff or anything by any means, but you've got a tweezer top bearish engulfing candle right now. So maybe you see a little bit of a pullback. And what I would look for in a case like this, if this candle pattern were to hold up for the rest of the afternoon, is I would maybe look for this to head back down to maybe that 420 20-day moving average area, and would probably become a potential pullback long candidate. There's a lot to happen there, so I can't jump to that conclusion right now. But with that strong chart, you would think in theory that would become a pretty good potential time to buy. Again, with earnings coming up, you got to be cautious with that. But this one would probably become off of my call list for the time being, based upon that technical pattern.
All right, and then the last name we'll talk about here, Amazon, AMZN, of course. Saw a report yesterday that Amazon has passed UPS and FedEx for parcel deliveries on a daily basis, which really just goes to show how much this stock's exploded over the last 15, 20 years. Um, Stock is been really just kind of caught though in a sideways 140 to 148 trading range over the past couple of weeks here. So, what is it that you like about Amazon that has it on your radar?
Yeah, again, just a strong chart. Thought it'd be interesting if any sort of reports. They usually put out a report updating on their sales. Sometimes that becomes a sell the news type event, so you got to be cautious of it. But just kind of one of those names. We've got a strong, market environment. Big tech's been doing well. Strong chart. If it gets another tailwind, I think it's just kind of one of those that I usually like to watch, regardless this week. So, yeah, like you said, kind of just chopping around there, and you would imagine at this point at the 147 level that 150 would probably be in its sights. So, only a couple point move, but if you can catch that on an options trade, that can create a pretty nice little trade. So, just a stock I like to watch. And I believe they did come out with a report and say they saw record sales on Cyber Monday, but it's clearly not really moving the stock. Like I said, sometimes those reports become a non-event for the retailers.
Yeah, and just to follow up on that, Adobe, they came out with their sales, which I think were about 12.4 billion for Cyber Monday, which was a record, and also above the 12 billion that they were originally projecting. So, definitely plenty of headlines out there to back up that commentary, Brandon. So, all right, let's move forward then with this week's topic. And a couple of weeks ago, for those of you who follow this segment, you'll recall Brandon talked about a bear call spread, which is a way to kind of protect yourself to the downside on against some moves. Today, going to be looking at the flip side of that, a bull call spread, and something. Given the run that we've seen in a few of these names, if you're looking for continued upside, could be a pretty advantageous way to play the markets here, Brandon. So why don't you tell us a little bit about the bull call spread?
Yeah, so a bull call spread utilized if you were bullish and expecting a modest rise in the stock. So I say modest because, again, just to kind of reiterate from a couple of weeks ago, that spread trades limit your upside and your downside. So, looking at NVIDIA, if you think that NVIDIA is going to 600 by the end of the year after this earnings and the FOMO and, the window dressing, then a straight call strategy, might be more appropriate than this particular strategy. So what it involves is it involves one long call with a lower strike price and one short call with a higher strike price. And both calls are going to be on the same stock or ETF, and it's going to have the same expiration date. So this is a net debit strategy. So again, that means that the money is coming out of your account and it would profit as the stock rises. So one benefit of doing this strategy, again, obviously to protect yourself a little bit more on the downside, but it would cost less than just buying a straight call option.
All right, so obviously using the NVIDIA example, right? Talking about that getting up to 600, which we're trading right now. We're just talking right around that 475 level here. Speaking of which, it did slip down below that 476 level that you're just talking about. But this would be something that would be a little bit more appropriate if you're, say, looking for it to get to 520 or 530.
Yeah, I would say so. So again, just if you think that a stock is about to break out, usually these spread breakout or breakdown, these spread trades aren't always necessarily the best way to go because they are going to limit yourself. But if you're looking at NVIDIA, you think that 520 is gonna, be the next target. And, but you're also maybe a little bit cautious about the market. We are seeing a little bit of selling here today where you're kind of bullish on that particular trade, but you don't think it's going to be this huge breakout. This strategy would be the way to go then versus the straight call.
Right, which would potentially be a perfect strategy in these times, right, Brandon, where like people are a little loath to chase those tech names, but it seems that's the only names that people want to get involved in. So this would be a perfect area. So let me ask you then, if you were just looking theoretically to throw something on NVIDIA, what would be the two areas you'd be looking at for both the call and put side?
So, I think
Again, this is theoretical. I'm not putting Brandon on the spot, but just to give you an idea of what kind of, what kind of strike prices he'd be looking at.
if it, just to reiterate about how and I think a lot of people know this, but just to say it again, I do a lot of the weekly expirations. So, if we were talking weekly right now, the 485 that I'm in, if you really thought that things were going to get moving, I'd be looking up to the 500 level. If I were looking out to put a spread trade through maybe the end of the year, or maybe call it the last week of December, I'd probably end up bumping that up a little bit. And actually, no, probably the 525 would be kind of where I'd be looking if I were to do a further out spread trade. If you wanted to be a little bit more conservative with it, I'd say the 500 level. On the put side, and again, this is me being pretty bullish on this particular stock, maybe 450. That would be taking us down to that 50-day moving average. I personally don't see the market going that way. I could be totally wrong, but I would imagine the support at the 20-day would be pretty strong on this. So for me, I'd probably keep it a little bit more conservative, maybe go a little below the 20-day and maybe look at like the 460 strike or something like that on the put side.
Okay, so basically you're looking at key levels then just to kind of determine which way you're going to go on both sides and just allow for it to just float in between those two.
Yeah, that's kind of a good side tangent, I think. For me, looking at something like a NVIDIA, and I've talked about this before about, going like super far out of the money and trying to hit a home run. And, that works sometimes, but a lot of times it doesn't work. NVIDIA, that's actually probably a perfect example. If you look, you've got the 20-day moving average a little above 470, and then you've got the 50-day at 450. So if you were feeling bearish on this, splitting the difference in that particular case is not a bad strategy, in my opinion. And, just looking here real quick at the options chain, the 460 put expiring this week is one of the more heavily traded contracts out there. So, there might be some other people that are having that thought. But yeah, no, taking those key levels, and I think when in doubt, maybe go a little bit more on the conservative side, or by conservative, I mean closer to the money currently. So yeah, the 460, if I were feeling bearish, I think would be a pretty good potential play.
Would there ever be a scenario where you might just take one of them off? Or does that kind of defeat the purpose of it? Like perhaps you got a little bit more bearish or bullish on the stock. Would you take one of the sides off on this trade?
Yeah, you would take off the short call. I like that idea. You gotta, if you're just learning the options and you're learning the strategy, just, be careful when you take these different legs off. But if all of a sudden, you're feeling super bullish on this thing, you could close one side of the trade. Now, I would caution in this particular instance that you're going to be long and short a call. Now, if you take off the long call, unless you own shares of that stock, then all of a sudden you've sold a naked option. And naked options are one of the riskier strategies out there because you can get absolutely smoked by them. So I think what you're thinking there, Gavin, is very spot on, and I think that smart, really trade management and options management. You just have to be careful if you just don't want to necessarily be short a call. And actually, a lot of brokers would maybe even reject that trade unless you had the highest level of options available. And you'd probably need to have enough money in your account to support that trade if it went against you.
Yeah, which makes sense, obviously, because as you said, it's in that debit strategy, right?
Correct.
Yeah, so that makes sense. What if there was a scenario? We'll just keep talking about the NVIDIA where perhaps a headline comes out, stock gets rattled, falls below the 20-day, and just kind of slips quickly to the 50. But you feel pretty confident that this is going to bounce back. Would that kind of be a scenario where you might employ, at that point, just kind of taking your put off and banking the profits on that and leaving the call open? Would that be a type of scenario, perhaps?
Yeah, I mean, yeah, absolutely. I mean, again, if you're starting to feel very bullish on the thing, I mean, kind of like I said before, I mean, if you're feeling really bullish on it, then probably not having a spread trade on to begin with, would make the most sense. But if you did deploy this strategy and all of a sudden things change, yeah, I would agree with you. I think that would be a good strategy to utilize. Or what you could do, you can always adjust the trade. You can change your strikes. You can adjust the spread on your strikes. So, there are different ways that you can tweak the trade based upon your liking. Or you can, again, it will cost you a little bit more just on a commission standpoint, but you can always just close out the trade altogether and then jump into, a new call based upon your new levels. If you saw it hit that 50-day and all of a sudden the buyers just step in, it's like, okay, now we're headed back to all-time highs. You could just close out that whole strategy and pick a whole, new straight call in that scenario too. So lots of options. I mean, no pun intended. I really didn't mean to say that.
Yeah.
But there are, this is kind of one of the benefits of options, especially as you get more comfortable with them. There's different ways to tweak and adjust these to manage your risk.
All right. What are some stocks that you would entertain this for? I'm assuming the Magnificent Seven names could be names that would fall in here. A lot of the tech names that have had big runs. I would think that would kind of fit the type of profile that you'd be looking at for something like this. It feels like this would be the end of a FOMO trade that you think things have run a little too much, but you think that there's higher, so you're just playing for that. Would that be a good assessment?
Yeah, no, I think any of those would work. I mean, yeah, definitely as we get a little bit higher here, as you're trying to squeeze some money out, but you do think that we do have some potential downside. That's what these spread trades are for, a little bit of protection on the downside. So yeah, no, I would agree. And then, I think these can be utilized with really any stock that's, again, got some decent volume on the option chain. And I point that out in this particular scenario because you are going to be selling an option, which always carries a little bit more risk. I mean, the spread trade kind of mitigates that risk. That's the whole point of them. But still, you're going to be, short a call in this scenario. So you always want to make sure that you do have enough volume on a particular stock to utilize this strategy.
Would it be something for trying to pick a bottoming pattern too, where you kind of want to have that protection in case you come in too early and the stock breaks down to fresh lows?
Yep, absolutely. Yeah, again, in that scenario, if you break down to the fresh lows, um, you've kind of made the wrong decision on this, and that happens to the best of us. And that's where the spread trade comes in, is you made the wrong call, and rather than just buying the straight call trying to hit the bounce, you did the spread trade and you ended up losing, but you didn't end up losing as bad as you would on a straight option.
Okay, just double checking something here. All right, anything else then, Brandon, to add on the bull bear or the bull call spread here?
Yeah, just a couple more points here. I'll run through real quick as we start approaching close to an hour here. So your profit on these is limited to the difference in the strike prices minus the cost of the spread. So if you bought a 100 strike at $2 and you sold the 105 at $1, your net cost would be $1. So the difference between your strikes is 5. So you just minus, or 5 minus 1 gives you your $4 potential profit. So this would be achieved if the stock price is at or above the strike price of the short call at expiration. And one thing I'd point out with these is since there is a max profit, a lot of traders will close them out when that gets hit, or like I said before, you could possibly readjust to different strikes if you continue to remain, moderately bullish on this particular stock. So there's really not a whole lot of reason to hold on to this original trade, since you literally you can't make any more money. That's one of the potential negatives of a spread trade. So in that
Brandon,
case,
let me ask you then, for this, is this something where you would automatically just kind of put stops in at those levels?
I wouldn't put yeah, I mean, you could.
So that way, if it's triggered, you don't even have to think about it, right? I mean, you're at max profit, so it would just be taken right off. Is that a strategy you would employ?
So I sometimes don't leave my stops hanging out just because the market makers like to find those.
Fair enough.
In this particular case, though, you'd want it to be found, right? And so you bring up an excellent point there. If the market makers are getting to the point where you've hit your max profit, you want them to find that trade. So in this particular case, yeah, you bring up an excellent point that would be a good strategy of, I don't want to say set it and forget it, because you want to keep an eye on it, but a little bit of a set and forget it scenario.
Right, where if all of a sudden the stock moved and you weren't paying attention, you were off looking at other things, then that would automatically hit it for you, I would think. Especially if it's max profit, right?
Correct. Yep.
Okay.
Yeah, I mean, that's the thing, is when you hit this max profit, really the only thing left that could potentially happen is the stock moves against you and your profit gets eaten away. So, either just adjust or get out of it altogether. So on the flip side, your maximum risk is the cost of the trade. So again, you'll know exactly what that is going into it. You'll see it deducted from your account. And you would realize this max loss, again, if both calls expire worthless, which would happen if the stock price went below the long call, which again would be the lower strike. And then just my last point here, just a little bit of a word of caution. So if you held these through expiration and the price had moved above the short call, so your basic theory of how this trade would work in this particular case is you would exercise the long call because it'd be in the money, and you'd be assigned on the short call, again, because it would be in the money. So what would happen simultaneously in your brokerage account is you would buy at the lower call strike price and you'd simultaneously sell it at the higher strike price. And again, this particular scenario comes into the factor of what your max profit is, because again, you've got these set buy and sell prices based upon strike prices. So the scenario I want to warn people about is if the stock price was trading around the higher strike price, but it didn't quite get there, that Monday or Saturday morning, if you will, you would be exercising that lower call that would be in the money, but you wouldn't have a simultaneous buyer on the other side. So, essentially you would need to have that money in there, and you'd be assigned those 100 shares. Again, in this particular case, if you start getting close to those levels, you've probably hit some of the profit levels that you might be happy with. There's probably a pretty good chance that you might not be holding on to that anyway. But again, just kind of through all these calls, I always like to kind of throw out the potential risk at expiration. And that would be one of them here in this particular strategy.
All right. Anything else then, Brandon, as we're just kind of keeping an eye out on the markets here, still battling that 16,000 level in the NQ. So anything else to add, Brandon?
No, I think that's about it. And yeah, like you said, I think for the afternoon, we probably watch this battle here at that 16,000 level. So might be a little interesting and maybe a little frustrating at times to watch. We'll see.
Yeah. It should, like you said, be interested and frustrating all at the same time. So maybe a perfect time to throw on a bull call spread there, right?
Yeah. Boy, we didn't even plan that one behind the scenes. How perfect is that?
Yeah, exactly. So, all right. Well, Brandon, as per usual, thank you very much. Again, we have recorded this, so anybody that wants to go back through and listen to it, also we'll be posting the notes from it. If there's anything that was missed that you're curious about, feel free to write in and write into feedback, and we'd be happy to pass along to Brandon, or I'll answer it myself. But Brandon, as per usual, thank you so much for coming on and chatting with us here about this another interesting topic as per usual from you. And obviously your insight into your trades is always great for the subs to get. So appreciate you taking the time with us today.
Thanks, Gavin. Take care.
All right, we'll talk to you soon. Okay, I'm just going to shut down audio here, and we'll be back up in a couple of minutes.